Hey guys, what's going on? I want to do a very quick video here on stocks. Ticker for this is STX, and I'm currently on the weekly time frame. Reason why this video is likely going to be quicker than most, as I got this tab open right here. It's the 1FC Muay Thai fights from Lumpini Stadium. They're streaming it live, so it's just in between fights right now. So I'm going to try to bang this analysis out pretty quick before the next fight starts. Okay, so before I get into it, a couple things. Number one, if you're not subscribed and you want to get notified when I release these videos, just click subscribe, click the bell, click on all. If you leave the channel without doing that, you might have a hard time finding it again, just because it's, pretty new channel and there's only around 1,000 subscribers, and because of that, I'm not really prioritized in the search algorithm. Also, if you want a place to trade stacks and pretty much any of the other coins that I talk about on this channel, I put a link to two different exchanges in the pinned comment and the description. The first one's for one called BitGet. I've been using that one for a while. I really like it, but the problem is in about a week they're going to start requiring KYC. I figured a lot of you guys wouldn't be down with that, so there's another alternative that I linked. It's called BingX, and I've been playing around with that exchange for the last few days. So far, it seems pretty good. I really like it, and as of right now, anyway, there's no KYC with BingX. And also, actually, if you click the link, you're going to see that they're offering you some pretty good bonuses if you sign up. Okay, so back to stocks. If you want to trade this asset, I recommend that you go to the weekly time frame and you draw this horizontal line. I have it as a range, okay, but basically just take a horizontal line tool and paste it right at the top of these candle bodies here. Okay, and you'll see that when we broke above it, we came back down. Look exactly where this wick came down to, okay? So this is where all the buyers stepped in. A lot of people are looking at this level. So it makes sense that you want to have this on your chart, right? We came all the way back up, and actually we made a new all-time high. When we came back down, look at where we got support. Well, we got support here for about a month anyway. These are weekly candles, and again, that was right at this level. And yeah, I have it drawn as a range. So I just draw the horizontal line, then I take the rectangle tool and I just extend it just a little bit. Okay, so to me, this is a range. When we broke below it, price came back up. And this line exactly, okay, this horizontal line, which I told you to draw based on the top of these candle bodies here, that's exactly where we got rejected right here. You see the price came above it, but by the time this weekly candle closed, the candle body got rejected, right here. And then the following week, this was a pretty bearish sign. This showed that the bears were in control. Following week, huge dump, okay? And again, the same pattern pretty much played out here. We broke through it. Came back down, wicked off this range here, and then again when we came back here, this range here, this horizontal line was serving as a support level, right? The reason why I have this drawn as a range, basically my range stems from the level that I just told you, the horizontal line, up to the lower part of these two candle bodies, okay? So you may want to replicate that on your chart. Okay, but as you'll see now, the price is below it, okay? So the price is below the most important support and resistance line on the chart. That's not ideal. Okay, now I'm going to change the time frame, and I'm going to show you something about what the pattern that we're forming right now. Actually, before I do that, I should show you this lower line, okay? So this lower line, all I did is I took a trend line, connected it from the bottom part of these two candle bodies here, dragged it across. We have a touch on it here, a touch on it here. So this is a valid trend line. We have multiple touches, at least 3 touches, valid trend line. And yeah, so this is in play as well. If this falling wedge breaks to the downside, you can look to this horizontal trend line as a potential support level. But as of right now, this falling wedge is holding. The unfortunate part, as I mentioned, is that we are below this major resistance line, right? We're below it. But yeah, the positive news is that this is a falling wedge, typically a bullish reversal pattern. And as these lines basically get tighter and tighter and converge here, price is going to be in a tighter trading range. But more often than not, this pattern will break to the upside. So hopefully it's able to break this horizontal region. Now, I drew this falling wedge on the daily time frame. And what I did here is I connected, actually, you know what, here we go. I'm going to connect the bodies, okay? Connect the candle bodies. Here, yeah, okay, so candle body connection here, right here, and I did the same thing for the lower part, right? So candle bodies here, and here. So you see that like sometimes the wicks pass through. You can draw it from the wicks, but on this particular wedge, I find more confluence here. So I can see on the daily time frame here, all the way back to when this pattern formation started in March. We have not yet had a candle body close above this down sloping level of resistance or this down sloping level of support. So I know that this is quite an established pattern. So if the price comes up here, for example, and we start closing candle bodies on the daily time frame above this down sloping level of resistance, that's going to be a very positive sign, right? And likewise, if we start closing a candle body on the daily time frame below this lower line of support, that's going to be a very bearish sign, right? And then I might use to take trades off of this once support, which would then be a resistance. Maybe I would enter a trade, try to short it down here to this upsloping level of support, and then I would place my stop loss just above this resistance line, which was previously the support, right? Okay, so that's basically stacks. Let's run some fibs and see exactly where we are. I'm going to go back out to the weekly time frame, and I want to see where exactly we got this bounce from, right? Because I'm suspecting it's going to be at a key level. So let's run it from this swing low all the way up to the top, all the way up to the swing high. Bang, right there, golden pocket, okay? Bounce off the golden pocket, and it was an impulsive move off this golden pocket as well, right? So yeah, we had an impulsive move to the upside off a very key Fibonacci retracement level, this golden pocket range, and now we're forming a bullish continuation pattern. So hopefully we can get above this horizontal level of resistance, break this down sloping level of resistance after that, and then if this breaks, we start making our way back up, because this is a bullish continuation pattern, as I just mentioned. Okay, so let me delete this Fibonacci, and now I want to run a Fibonacci retracement level from the start of this move and see where we are right now. So the first Fibonacci pool, based on this, this swing low all the way up to the swing high, brought us to the golden pocket. Let's see where this smaller move has brought us. Okay, so Fibonacci retracement tool. Let's start from the bottom here, bring it up to the top. So yeah, we are again at the golden pocket range. So it would make sense that the price bounces off this level. So if this golden pocket range breaks to the downside, if the price comes below it, and that would also mean that it breaks this lower line of the falling wedge, then we have a support level that's quite obvious, okay? So that would be the 786 Fibonacci retracement level, which coincidentally lines up perfectly with this upsloping level of support. So right around here, okay, right around here. I'm not saying the price is going to get there. If Bitcoin crashes, however, you can look at this as a potential target on stacks, and that's going to be around maybe like low 30-cent range, okay? Low 30-cent range. But again, I'm not saying it's going to go there. We are at what could be a support level right here, this golden pocket. So just as this right here bounced and possibly off the golden pocket from this pull from the swing low up to the swing high, we may end up seeing the same thing right here from this swing low to this high, golden pocket bounce, and then maybe explode out of here, explode out of this falling wedge, and then make moves to the upside, right? So not really sure what's going to happen here. Now, as for how I would play it, I'm hesitant to take longs right now just because we are underneath this key level of resistance, right? So this line right here is the most important support or resistance level on the entire chart, and we're right below it right now. So I'm not gonna look to take a long until we start closing a weekly candle above this, right? So I want to start closing weekly candles above, it's about just under 50 cents, so about 0.4969. I'd want to see weekly candle closes above that, right? Above right here before I even consider taking a long. And actually, if that does happen, I might as well wait until we break this down sloping level of resistance from the top line of the falling wedge as well, right? So weekly candle close above here. But if I long this, I'd probably have to take profits at this level right here. So I might even just wait until this break to the upside, maybe come back, retest, and that's when I'll enter a long position, kind of like a long-term swing trade, right? Actually, I already hold a little bit of stacks on a ledger, but this is where I would try to add more to my position and then hold it till we reach higher targets, right? Now, as for a short rate here, would I short? Let me go back to the weekly time frame and let's take a look. I'm not going to do it personally. If the price does come back up to this, again, like the 49-cent range, 49.69, 49.70, if it does come back around there, I may just look for the smaller time frame, maybe a daily 4-hour, and maybe take shorts off that and use this as a backstop for my stop loss, right? Then I would just go for like pretty conservative targets to the downside here. As long as I can get a good R&R in a trade, I may consider taking it. But yeah, once again, if you want to trade stacks, just to sum it up, this was meant to be a quick video. I'm probably missing my fight. Just draw this horizontal line. It's the most important line on the chart, and then take trades based on that. Anyway, just a quick update, guys, and hopefully you found that helpful. If you did, smash the like button, and if you want to be able to find the channel again, click subscribe, click the bell, click on all, and yeah, if you want to place your trade stacks with no KYC, check out the link I have in the pinned comment and the description to the one called BingX. All right, guys, hopefully you found that helpful. Take care. Bye.